get right to Christian Baha. He is founder and also owner of the Superfund Group of companies, which manages a total of $1.6 billion in investments. Some of his funds are up by as much as 70%, 70% year to date. Now, the question is, how does he do it? Let's talk to the man himself. Christian joins us right outside in our newsroom. Christian, good to see you again, and good morning. Before you talk about the secret of your success, let me get this out of the way. What the market is talking about right now, has been for the last couple of days, is this whole Bernie Madoff scandal. You're in a good position because you have absolutely no exposure to Madoff, correct?
Correct. We are a managed futures fund, and we are not investing into any other hedge funds.
All right, you only invest directly yourself. Okay, let's get down to your performance now. Some of your funds are up 70% year to date. That is almost unheard of when you've got a lot of other hedge funds falling by the wayside, dying, closing shop. How do you do it?
It's actually a managed futures fund, and managed futures is an asset class that is unfortunately not established yet worldwide because there's just 260 billion in there. But what we basically do is investing long and short in all the commodity and financial futures markets, and we do trend following. That's like we have a computerized trading model that we developed. That's nothing I would say special than any other of the managed futures funds, and all the managed futures funds are up this year. I would say 15% on average. That's the index for managed futures. We are up a little bit more, and in the long term, our funds made also like 32% the C strategy annually since 8 years. So
all right. Interesting. I mean, so when I hear the word algorithm, I think black box trading, fire and forget. Is that essentially what you do?
Yeah, but it's we are in the information age today and not in the industrial age anymore. And also in the investment universe, unfortunately, most of the players and fund managers are still in the industrial age because there is a fund manager trying to buy and sell and makes his own decision, while all the exchanges are electronic today, and the computer is much better in doing any decision because he keeps out human emotions from trading, and he is trading just with his predefined rules, like has always a stop in the market, follow the trend in the up or in the downside direction, and the money management is done also automatically. That means we never risk more than 1% in any specific trade. All
right, interesting stuff. So also eliminates a human error as well as a potential for abuse, as we've seen in the Madoff scandal. Christian, let's get right to the charts. You've got our fancy dandy telestrator right in front of you, so let's start playing with that. The other big question people in the market are asking is just when the heck are we going to see a bottom to this? Let's bring up the Dow if you could. Since November lows, we've come back about, say, 4% or so. People are calling this, at the very best, a bear market rally. What do the charts say, though? How much more does this bear market rally have to go?
We are in a clear downtrend in the Dow Jones Industrial Index as well as in all the major indices worldwide. Here we can see that the 50-day moving average and the 20 to 200-day moving average is going down. We have a clear downtrend, as you can see here, this trend channel, and there is no technical sign that there will be a reversal. For sure we will have a few upside corrections as we saw already this year, but there is a clear downtrend in the Dow Jones.
Where's support for the Dow, though, according to the charts?
Yeah, at about 8,000, and then all the levels that we saw in the past, 6,000, 4,000, 3,000 points. But I think it's not a good idea to invest into equities at the moment, and maybe it's not a good idea for the next 5 to 10 years at least. There's other areas that people should look at and not just try, invest and hope, because people want to make money if they invest, and not just the money should not just sit there and lose if the market goes down.
Wow, okay, clearly you're bearish stocks. You don't like them at all. Don't think you should be in equities at all for the next 5 to 10 years. We'll talk about the alternatives then, Christian, when we come back in just a bit. Christian Baha, founder, owner of the Superfund Group of companies. We'll continue talking to him out at our newsroom in just a little while. But, moving right along, let's get back to Christian Baha. He's still standing by outside in our newsroom, founder, owner of the Superfund Group of companies. Christian, we left off here saying that you don't like equities at all. You don't think investors should be in them for the next 5 to 10 years. So what should they be in then?
I can only tell you where I'm in, and I think that's I put my money also where my mouth is, and that's physical gold, 1/3. Another third I would buy real estate, mainly not houses but land, also where you can plant something, so farming land basically. And another third, at least, maybe 50%, managed futures funds or fully systematic funds that are having a very high performance potential but a very low risk.
Yeah, interesting stuff. I mean, you made the point very early on when we first started talking to you that the beauty of managed futures, whether you agree with black box trading or not, is that in this case you invest directly in markets, not through somebody else, so therefore zero exposure to the foibles of somebody like Mr. Madoff. So that's a good point to get across to viewers as well. Let's get on to the other two asset classes, though. Gold, also property. Gold, 1/3 of your portfolio, your money is in the yellow metal here. Talk to us about why you're bullish on gold.
I mean, I'm very bullish on gold because gold is the oldest currency since human beings started to had a payment system. This was for 5,000 years now. Gold had a very hard time for the last 20 years because we had an all-time high in 1980 at $850 an ounce. Inflation adjusted, that high today would be already about $2,000 an ounce. So we are clearly very undervalued with $850 an ounce market price, though it's the all-time high from back. I mean, gold, the demand is always increasing when there is a recession or when the times is going to be harder for the people, and therefore I expect gold at least to go to $2,000 to $3,000 an ounce in the next 3 to 5 years.
Wow.
But it's also a question of the inflation and a possible hyperinflation of the US dollar. So it's not just that the gold will be so strong, it's also that the dollar is going to devalue more in the next coming years.
Interesting, because we always talk about this inverse correlation between what dollar does and what gold does. I mean, we've had dollar rally for the last 4 months or so. The last week or so that started coming off, and a lot of people think this is it. This is it for the dollar rally. We're seeing the demise of the dollar starting because the Fed is being super aggressive in its last cut, bringing rates down to zero. So you agree with that then, I suppose? If you think this is it for dollar, then gold's got to go the other way.
It's really very hard to estimate in the very short term for a couple of months what is going to happen. I'm not a prophet, so I really don't know. I have no clue about that.
Yeah.
The only thing I can tell you in the long term, I have quite strong opinions about the dollar, and that is not a very positive opinion that I have. Okay. And I think the dollar free fall will go ahead, but even stronger. But even the other paper currencies like the euro or the Japanese yen will be not as strong. So I would say the only real currency in the world, as it is for 5,000 years, is gold and maybe silver as an additional metal. And people should really stick to hard facts in the crisis times and not go with any paper assets.
Wow. Okay, so just to recap for viewers, Christian says no stocks, not for the next 5 to 10 years. You like gold right now, $850, $860 an ounce. You see in the next 2 to 3 years gold going to $2,000, maybe even $3,000. So pencil that in, folks. And also, Christian, let's get to the third asset class you like. Property. 1/3 of your portfolio is in that, and you're not talking bricks and mortar. You're talking greenfield. You're talking grassland. What is the thinking behind that? How much of it is lack of arable land? How much of it is sort of a biofuel play as well, if it is?
Yeah, it's mainly land where I can farm something in different continents around the world. Mainly, I have a house also there to live. So. It's not just an investment into a fund. It's mainly places that you can use also for pleasure, but also you can plant there something and grow something. So it's that I don't want to just trade all the commodity markets and the grains. I also want to grow them and then to hedge them. And I think it's, first of all, it's a nice pleasure to build something. On the other hand, I think it's a good investment for the next decades, because I think property, especially farming land, will become very, very valuable in the next couple of years.
Okay. All right. Especially where, though, Christian?
All over, basically. In Europe, in Switzerland, for example, in South France, for example, but also in Latin America or in the Caribbean, basically. So it's spread basically everywhere. I'm looking heavily in Asia now to find something. Also in Australia, New Zealand is a very nice area to invest. I'm not generally investing in these high-end areas where real estate price was exploding for the last 15 to 20 years, but more in the big cities I'm generally not investing.
Okay, sounds like a wise move to me. What do you think though about the idea, and I'm sure you've heard of this concept called land banking? There are a number of companies doing this, big ones. In fact, I mean, they amass capital, they buy up huge tracts of land, chop it up, and I guess they're securitizing it as well. I mean, is that something that's worth going into, or would you be just buying directly?
Everything that is on paper, I wouldn't buy, in my opinion. Securities were asset-backed securities. Everything is backed in, or bonds, government bonds. Equities, yes, but only if it's a very solid, a very good company where they have a really long-term, solid strategy. But land, no. I wouldn't buy securities in land. I would like to own the land myself. Okay. I don't need to buy security, and then you don't know the management, you don't know the CEO, and they might do something that is not correct. Understood. I don't need that risk.
All right, you want to feel the grass and the soil through your fingers. Understood. Christian, we'll come back and talk more in just a bit. Christian Baha, founder, owner of the Superfund Group of companies. We'll get back to him right outside in our newsroom in just a little bit.